All right, so let's get some more analysis and insight on this market meltdown with Benjamin Stani, Business Development and Sales Director at Matrixport. Benjamin, thanks for talking to us. I hope you're well.
I'm doing well, thank you.
Listen, crypto markets, as I said, reeling, hitting lows we've not seen for quite some time. Can I just get your general reaction to what's going on and your opinion on whether we're anything close to the bottom yet?
It's very hard to call where the bottom here is. I think what makes sense is looking at what factors are dragging us lower. And I think there's two major factors here. The first you mentioned is on the macro side of things. We've had basically our risk asset is short-term dependent on whatever the Fed does, and the latest inflation print certainly spooked markets. So correlations with equity markets and other risk assets are at all-time highs. And I've seen some of banks calling even for 75 basis points hike at the next Fed meeting. So obviously that's very hawkish and will have impact on our asset class. I think the second factor is stress within crypto. We've seen that first starting with the Luna collapse, and now we're starting to see that spread into other major crypto lenders that have come under pressure and had to either raise liquidity at painful valuations or in some cases even had to halt withdrawals, which is causing, of course, even further stress.
Yeah, look, Benjamin, in terms of risk, how effectively do you think crypto markets are pricing all of this in? In any sense, do you get the idea that we're perhaps seeing a maturing of the market in the way that we're seeing participants behave and potentially adjust to this situation?
Yes, you could say that in a way. Our industry is becoming more mature, and this here is predominantly a liquidity issue. I'll take the example for STETH because a lot of discussions have been circling around that one. Celsius, the player that you've mentioned before, who also halted withdrawals for their users, they had a significant jump in STETH. In a nutshell, how it works is you can deposit Ethereum into a protocol called Lido, and they will give you a wrapped liquid staked version of that Ethereum. On the way in, it's one-on-one. The problem here is on the way out. There's no way currently that you can unstake your Ethereum. That will only be possible once Ethereum transitions successfully to proof of stake and will implement unstaking mechanisms. So in a liquidity issue where we're having now, a player that needs liquidity will have to sell this STETH at a discount. And that's what we're seeing in the market already happening.
Yeah, we're looking at some really interesting potential resistance levels now in terms of positions. What are you guys talking to your clients about? At what point do you start to see people considering getting back into the market? Where do we see a market cap begin to find some sort of support?
It's very hard to pin down any levels here because we've broken through many important resistant levels, and it's at the moment what's going on is there's a major liquidity stress, as I've said. So you don't know which players are solvent yet. You don't know how long this drag on liquidity will continue. And so I expect markets continue to be very volatile in the near term. And for people who have not experienced the crypto bear market in the past, these markets can come very sharp and can last much longer than you would expect. So I would strongly advise anybody investing in crypto to be extremely careful with leverage. I always say that, but especially around these times, and invest in assets that you have a very strong view that they will have value in the long run, and do your dollar cost averaging into these assets.
All right, Benjamin, we'll leave it there. Thanks very much for your insight.
Thank you very much.